So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
Vamos a llegar, por supuesto, a mejores condiciones.
I have always said that in these cases, you need to keep a cool head to face any problem. But I also feel very confident because there is something we have in the government. We represent our people. We represent the dignity of Mexican people.
The Mexican president calling for cooler heads as President Trump surprises her country and the EU with a 30% tariff threat. Live from Sydney, this is Insight with me, Heidi Stroud-Watts. We'll be diving deeper, I should say, into the stories that matter with crucial context and sharp analysis. US futures weaken and safe havens climb as the fresh tariff threats hit the EU and Mexico, the bond market questioning Fed rate cut chances ahead of a key US CPI report. We hear from BFA's head of G10 FX strategy, Adarsh Sinha, who is flagging crowded US dollar shorts and cautions on emerging markets positioning. And the Air India crash report points to fuel switches being manually cut off as the investigation focuses on pilot actions seconds before the crash. We do have some breaking data when it comes to the keenly eyed June trade data out of China. We had been expecting to see some sort of return of resilience given the temporary trade truce. China June exports, these are in dollar terms now, rising 5.8% year on year. The estimate was for a gain of 5%. Imports in dollar terms rising 1.1%, also bettering expectations of a 0.3% gain, according to economists that we've spoken to. It is also seeing really some of that bounce back when it comes to imports, given that we saw an almost 3.5% contraction in the previous month. We saw that 4.8% gain in May as well, so that 5.8% there also a beat. So we are seeing some of those sort of green shoots when it comes to China. We're also expecting potentially that to feed through to broader headline growth outpacing the target as well, and potentially that really gives you the takeaway that the stimulus pressure, certainly when it comes to both fiscal and monetary stimulus, will be a little bit lessened on policymakers. That boost from strong exports is quite evident, really helped along by that trade truce by the US. Ongoing fiscal support is still there, though, aimed at shoring up domestic demand. Economists are still expecting Beijing, as well as the PBOC, to essentially hold off and be cautious when it comes to further stimulus for now. But, of course, all of this ties into our top story, President Trump's unrelenting tariff offensive. Over the weekend, he sent more letters declaring a 30% rate for Mexico and the European Union from August 1st if they can't negotiate better terms. Sources telling Bloomberg the EU is now preparing to step up its engagement with other countries hit by higher levies, including a potential coordination with nations including Canada and Japan. For more, let's bring up Bloomberg senior editor Bill Ferries. And Bill, this is certainly a strategy that we've seen from the likes of China, right? The sort of charm offensive to try and find alternative markets for their goods and to try and sustain trade. What are we hearing in terms of how the EU might approach this?
Well, it should be said that Donald Trump's letter over the weekend threatening those 30% tariffs on the EU really kind of disrupted what had been a fairly complex negotiation, where I think it seems like both sides were working towards quite a different tariff structure that included perhaps some carve-outs for things like alcohol and automobiles and pharmaceuticals with different rates for different products. This threat of a 30% tariff kind of shook up negotiators, and it's too early to be seen whether it really implies a big change ahead of that August 1st deadline. That's 2.5 weeks away. Certainly a lot could happen between now and then. But there is this more of an effort being put forward now between the EU to reach out to other U.S. trade partners, including perhaps Canada and Japan, to kind of do a bit more coordination, see what they're hearing in their talks, and perhaps how trade could be rerouted so that in some ways they could lessen the blow, perhaps, of whatever happens on August 1st when tariffs come into effect. Although it should be mentioned, Germany's chancellor said that at 30%, those kind of tariffs would hit the German economy to the core. So I think there is still going to be a very strong effort to try to negotiate the U.S. down from those levels and perhaps get back to what they were working on, which is more of a sector-by-sector approach.
When it comes to Mexico, we've seen months and months of, visits to the White House, engagement. The U.S. has sounded sort of quite encouraging in terms of the progress that's been made. So is it surprising that we've had this tariff letter as well? What's been the response from Mexican officials?
Yeah, it's really been up and down with Mexico and Canada, frankly, the two nations in that USMCA trade agreement. There was, the new tariffs that have been announced have tended to be balanced by a caveat that goods covered under the USMCA agreement, which is really the majority of trade, wouldn't be affected. Now, we don't know how that will play out. Mexico, for now, keeping a very calm and cool head about it. Claudia Sheinbaum, the president there, saying that listen, a lot of countries have gotten these letters. We have a negotiating team that's still working on things, and a lot could happen between now and August 1st. So not a very strong reaction at this point. They seem to have some confidence that whoever they're dealing with specifically in the Trump administration are people they can work with and that they still have time to cut a better deal.
Bloomberg senior editor Bill Ferris there in Singapore. We are also seeing some breaking news when it comes to Malaysia at the moment. This is what we're hearing. Malaysia is tightening export controls on high-end AI chips from the US. This is according to the Malaysia government ministry in a statement. They'll be requiring permits on trade of high-end US AI chips. So the US is Malaysia's third largest market when it comes to semiconductor exports. It's about a tenth of the world's semiconductors that's packaged by Malaysia. About 2/5 of exports are made up of electronic and electric products there as well. So we are just getting this latest announcement when it comes to Malaysia, of course, also a country that has seen trade tensions with the United States given the backdrop of Trump's trade war, of course, and a tariff war. There's a lot of division there, but it's also been quite interesting that we've seen chip firms in Malaysia just pausing their investment plans as well amidst this ongoing tariff angst and uncertainty. We're now hearing that they're tightening export controls when it comes to high-end AI chips from the US. All of this volatility around Trump's tariff negotiations is adding to broader uncertainty when it comes to the Fed's rate path. Investors will be watching the June US inflation numbers this week for any signs of growing price pressures from tariffs or otherwise. It comes with bond investors are increasingly sceptical that the Fed will resume cutting rates by September. Traders now only seeing about a 70% chance of a rate cut at that meeting. That is down from a virtual certainty as recently as June. Let's get some more now from Adarsh Sinha, who's the head of G10 FX strategy at BofA Securities. Adarsh, really good to have you with us. So let me start off with the dollar. We've been sort of back and forth for a while, but is it possible to say that the trajectory is going to be sort of one way going from here? Do you think we kind of resume that dollar weakness story if you look at fundamentals?
Sure. Hi, Heidi. So, look, I think the direction will continue to be weaker for the US dollar, but it's going to be a much choppier path from here. And I think that's for a couple of reasons. One is from a technical perspective, and even to some extent from a positioning perspective, sentiment is quite extremely bearish. So when you have this kind of situation in any market, you tend to see a bit more two-way price action. But moving beyond sentiment and positioning, from a fundamental perspective, I think a question we're getting is all these tariff headlines, back in April after Liberation Day, all of this was quite bearish for the US dollar because people were increasing the risk premium on US assets. Can you see a repeat of that as we approach the 1st August deadline? And my view is it's not that clear. 1st of August is very different from the 2nd of April because the tariffs are selective. You're getting deals with some countries, tariff threats for some countries. It's not as uniform as it was after Liberation Day. And therefore, for me, the implications for the US dollar in broad-based terms is not as clear. So I think the dollar will weaken for a variety of reasons, but it's going to be a choppier path.
Where do you think the vulnerabilities are? I know that you're particularly sort of looking at what we could see happen with emerging markets.
So look, we kind of have a medium-term structurally positive view on emerging markets, and kind of the backdrop you have of a weaker US dollar, lower energy prices. All of that is quite constructive for EM. However, in our conversations with clients over the past couple of weeks, as well as in client surveys that we've done recently, everyone shares that view. Everyone is very constructive on emerging markets. So what we're recommending is kind of maintain that medium-term structural constructive view on EM, but maybe take some chips off the table heading into the 1st of August, or maybe add some protection for your structurally long EM portfolio. So just some near-term caution on emerging markets, but we do remain bullish further out.
Adarsh, one of the other uncertainties when it comes to what happens to the dollar side of all of these trades is what happens with the Fed, right? I know there's already uncertainty when it comes to the Fed's rate path, given the trade uncertainties and how that potentially develops when it comes to the US economic data going to the end of the year. But President Trump is not missing any opportunity to also lash out at Chair Powell too. Do you think the Fed independence, the Fed leadership uncertainty also weighs into dollar assets?
I think it does. I mean, it's remarkable how much, we've seen the administration criticize Fed policy making. But I'll tell you what's even more remarkable. It's how little the market is reacting to it. If you look at Fed pricing, every time you get a headline where Chair Powell is being criticized, the impact on 2025 pricing of rate cuts has been quite minimal. I think what that tells you is the market is basically distilling the signal from the noise. There's a lot of noise around the Fed chair, around what's going to happen over the next several months. But I guess the base case for the market is that Powell remains the chair until next year. And if that's the case, it's going to be data dependent. It really depends on what happens to inflation and growth. So the way I put it is the market is looking more at the data signal rather than the noise you have around the Fed chair. And that's why the market reaction to all these headlines has been fairly limited.
The euro's primary trajectory continues to be upwards, right? And we've seen not a lot of willingness to fight that, even with the latest tariff threats. Does that speak more to kind of the taco thinking or the fundamentals of the euro?
I mean, I think the short-term reaction is definitely taco thinking because, on one hand, you have the 1st of August, so the market's not going to do anything until you get to that deadline. And secondly, you've had the European Union over the weekend confirm that they will not be going ahead with the countermeasures that were scheduled to be implemented this week against US exports to the EU. So what that tells us is that in this 2.5-week period, you're going to see continued negotiations between the US and the EU that were kind of in the final stages anyway. So I think that's part of the reason the euro is basically unchanged, which is it fell a bit in the early Wellington session. Now it's basically unchanged because the market is saying, OK, they're still probably going to get this mini deal done by the 1st of August. If it doesn't happen by the 1st of August, however, then that will be a big surprise. Like if you have 30% tariffs going up against the EU, I think the euro will have to react to that. But right now, it's very much kind of the taco assumption.
The valuation when it comes to the yuan, and I know that this sort of plays through to how it impacts other EM FX as well, but do you see that sort of holding firm even because of a structurally weaker dollar, or do you think the trade uncertainties will continue to play into the Chinese currency too?
I think the renminbi, it goes beyond the weaker dollar, because I think the most interesting thing for the RMB is that the daily dollar CNY fixings that the PBOC sets every day has been consistently coming in below market expectations or below surveyed expectations. So the PBOC is telling you quite clearly from its daily fixings that they want the RMB to gradually strengthen. And the latest daily fixing, as you know, was below 7.15. It's not clear what the reasoning behind that is. Obviously, there's a separate US-China deadline, trade deadline in the middle of August. Right now, that's on the sidelines because we're focusing on all the other countries. But let's see what happens as we get closer to that deadline. But all I'll say is it's quite clear from the PBOC standpoint, they're comfortable with some gradual appreciation in the RMB. And if that's the case, as you said, that should be broadly supportive of other Asian currencies as well.
Adarsh, always great to chat with you. Adarsh Sinha, who's a BofA Securities. We will be getting more with you, though. We'll be zooming in on the outlook when it comes to the yuan a little bit more. Beijing, of course, wrestling with not just US political tensions, but also its own structural domestic consumption challenges as well. This is Bloomberg. China's June trade numbers have come in surprisingly strong. Exports denominated in US dollars growing 5.8% on year, topping economists' forecasts. That's bringing our China correspondent Min Min Lo. So give us sort of what the reaction's been to the trade numbers. Broadly, they paint a picture of an economy that, at least for now, is showing some resilience thanks to that temporary trade truce.
Yes, both export and import numbers beat analysts' expectations. As you said, 5.8% on the export numbers versus estimates of 5%, and imports too up 1.1% versus estimates of 0.3%. And that's particularly significant considering that imports have been negative for quite a few months. This is the first positive print that we have been seeing since February of this year. As you said, a part of it is the temporary trade truce. So the officials did mention at press conference earlier that the government will have to work very hard to maintain that growth in trade numbers in the second half of the year. And if you look at some of the breakdowns by country, you look at the first half of the year, exports to the United States in yuan terms was down about 10%, imports too down about 7.7%. That's to the US specifically, and it shows you that it's trade between US and China is really affected by those reciprocal tariffs, although overall the number is still holding up pretty well, which shows that China exporters have been really resilient in finding alternative markets to the US in the meantime.
You were just in KL with US Secretary of State Marco Rubio. Of course, they're meeting with the Chinese Foreign Minister Wang Yi last Friday. Did we glean very much when it comes to the state of this relationship?
Well, actually not very much. If you look at what we've gotten from the Chinese readout, didn't tell us a lot about the substance of discussions, although both sides agree that the discussion was constructive. So at least there is some level of consistency in terms of the messaging from both sides. If you recall, a few months ago, US and China were always contradicting each other, but here they're agreeing on the tone of the discussion. Marco Rubio also saying that it could potentially lay the groundwork for a Xi-Trump summit sometime later. Have a listen.
Odds are high. I think both sides want to see it happen. Obviously, we have to build the right atmosphere and the right deliverables so that a visit isn't just a visit, but it actually has some takeaways from it that are concrete. But there's a strong desire on both sides to do it. The president wants to do it. The Chinese side wants to see it happen. President Xi said that publicly. So I think the odds are high. I don't have a date for you, but I think it's coming. It'll happen.
So you heard Rubio there saying that they're still working towards building the right atmosphere. They do want to have some concrete deliverables that the two presidents will be able to announce when they meet. And so the question then is what happens, especially when it comes to trade issues. That's the biggest sticking point between the two sides, right? And Marco Rubio is someone who doesn't have a lot of power when it comes to deciding on trade issues. Of course, Scott Bessent has said that he'll be meeting with his Chinese counterparts in the coming weeks. And of course, we're looking ahead to that August deadline, the mid-August deadline, when the temporary truce could end. And some economists believe it's still possible that maybe tariff levels could still increase later on. And of course, that is something that could possibly derail this leaders summit. So we still have to wait and see what happens next.
Bloomberg's China correspondent Min Min Lo there. Let's bring back Adarsh Sinha, who's the head of G10 FX strategy at BofA Securities. Thanks for hanging around with us. I wanted to talk a little bit more about the yuan and I guess your perception of how that economic resilience is playing out, given that we know sort of the longer-term structural issues, even without a trade war in the US, are pretty, intensely problematic for China.
Yeah, absolutely. I mean, look, I think the structural issues or the structural long-term growth issues for China are well known, and it's difficult to say that that's not factored into asset prices. I think the other big negative for the RMB always was that if you see trade escalation, China would respond like they did in 2018-19 by weakening their currency to offset the impact of tariffs. I think it's quite clear that that's not the strategy they're taking right now. And so what you're left with, in my opinion, is that China growth expectations, kind of shorter-term growth expectations for 2025, have been quite weak and sentiment has been quite depressed. And while things have stabilized over the past couple of months, I would argue that the risk is still a little bit to the upside in the sense that sentiment is so bearish that if you have economic data or if you have some kind of trade truce or trade agreement, you're likely to see a much bigger market reaction than the other way around. And by the way, this is part of the reason we've also recommended being long the Australian dollar. That's one of the currencies that's likely to benefit if you see an improvement in China sentiment.
Yeah, that's interesting. Always that sort of proxy trade to China, right? How does the RBA weigh into that outlook for the Aussie?
It matters at the margin. I think we were one of the few banks that said the Reserve Bank of Australia would stay on hold last week, which they did. Obviously, interest rates have moved to kind of price in that surprise, but we still think this easing cycle from the Reserve Bank of Australia is likely to be a shallower one than markets are currently pricing in. So at the margin, that's yet another reason to be long the Australian dollar.
Where do you see the vulnerabilities when it comes to Asian FX, given that everyone is scrambling and most are failing when it comes to reaching a trade pact? There does seem to be a narrative that policymakers are getting ever more frustrated because the goalposts just keep on shifting anyway.
Yeah, I'd highlight two areas of vulnerabilities. One is quite well known and I think consensus, which is Southeast Asia. I mean, obviously, it's going to be a bit harder for Southeast Asian countries to reach an agreement with the U.S., partly because of this trade redirection issue that's quite important for the U.S. I mean, I know Vietnam has reached a deal, but we still don't have details on how they're going to monitor this trade redirection. So I think there are a lot of issues for the Southeast Asian countries, and we're probably a bit less constructive on those currencies compared to North Asia. But the other area of vulnerability, in my opinion, is the Japanese yen. Japan was supposed to be one of the first countries to get a trade agreement with the U.S., and it still looks like they're no closer to getting a trade agreement. And, of course, you have the upper house election coming up. That's quite uncertain at this point. So we are quite negative on the outlook for the Japanese yen as well within the Asia FX space.
Yeah, it sounds like parts of the markets are really bracing for potential domestic political shock. Are you in that cohort?
Definitely. I think if you asked me a couple of weeks back, I would have said the Japan upper house election is a bit of a blind spot for financial markets. It's no longer a blind spot. We're getting a lot more questions about it. But I do think if you get the risk scenario of the coalition losing its majority in the upper house election, I don't think that's priced into financial markets. And if that happens, it would mean weaker equities, a weaker yen, and a steeper interest rate curve in Japan.
How much vulnerability do you assign to further weakness in the yuan?
So for the Korean won, assuming you're talking about the Korean won, I'd say we're reasonably constructive on the Korean won. It's been one of the currencies that lagged the broader dollar sell-off until recently. And I think as long as you see a broader risk-on sentiment where you're seeing equity inflows into Korea, ultimately the Korean won should benefit more than some of the other currencies within the Asia-Pacific region.
Adarsh, really great to have you with us. We'll let you go now, but Adarsh Sinha is our head of G10 FX strategy at BofA Securities. And coming up on Insight, we'll be hearing from the European Commission Executive VP Teresa Ribera on the EU's trade talks with the US and China. Much more ahead. This is Bloomberg. Welcome back. You're watching Insight. The European Commission says any escalation of trade disputes should be avoided while calling for a level playing field. Competition Chief Teresa Ribera spoke to us earlier.
Trade provides prosperity, and I think it is a good thing. And in general terms, the global value chains are so obviously important for anyone that we should avoid any type of trade escalation, trade war among the different countries, between the different geographies. But of course, we need to ensure a level playing field. We cannot keep our very open economy in Europe in such a context that there may be many people willing to be part of our single market, but that may not be working with the same rules the same approach, so to reflect the right prices according to the real cost. So I think it is good to explore with the rest of the world how we can work together, and it is good to try to avoid this escalation with the United States. China is a great country. Of course, we need to be sure that investments flows are fair and that we do not harm each other.
When it comes to fair trade, what sort of message have you given to Beijing when it comes to overcapacity, not only on clean technology sectors, but also, of course, on rare earth exports?
There are two things that you are mentioning in your question. One of them is, yes, we need to ensure that the overcapacity, the production beyond what it may mean, the domestic demand could overflow over markets. That could be pretty harmful for those that also produce in other geographies. So we need to be responsible, and these formal and informal conversations between the different governments is going to be key. Then there is another issue that you are raising in your question. What about the availability of rare earths, raw materials that may be critical for the new economy, both in terms of the renewable energy solutions or in terms of the digital transformation of our economies? And it should not be a bottleneck, killing the possibility of prosperity all over the world. So that is another bullet where we will still need to talk, to discuss, to avoid harm.
When it comes to competition itself, given Washington's tariff threat of 30% by August 1st, is that going to hurt Europe's ability to compete in global markets in the United States? What are your expectations of what that could do to trade flows?
I think it is very bad news. I cannot understand how any country can think that getting isolated from the rest of the world is a good thing for its economy. To what extent fixing the way they want to produce, sell and cut the ties with other providers, suppliers all over the world is not good news for anyone. So I think that it is not good for Europe, it is not good for the United States, it's not good for anyone in the world, because the size of the American economy is so important that it would have an impact, of course. But it is also true that it represents more or less 17% of world trade. So we need to pay attention, to prepare, to be sure, to the extent possible, that this does not come a reality. But if it finally pitifully becomes a reality, we need to keep on working to build resilience and to build partnerships with the other partners, the other allies in the world that are also open and willing to apply the rule of law and to ensure that peaceful and fair trade flows keep on taking place.
What could those partnerships look like? Are we talking about more multilateral trade, or are you having separate conversations with individual countries to strengthen bilateral ties?
Both things are important. I think that the World Trade Organization stated the rules. It is true that there may be much activity right now in that context, but it is also true that the bilateral, bi-regional partnerships are already taking place. The European Union has signed trade agreements recently with different geographies. We entered into these conversations with Mexico, with Canada, with Mercosur, with Switzerland, with Norway. So I think that this is absolutely key. We need to explore how far, how deep we can go in the Pacific area with other countries. For instance, these conversations that are ongoing with India are quite important. And I think that we need to connect the different societies, the different consumers, but the different goods and services that are able to work, to trade in a peaceful and fair manner, so that we can keep on creating wealth on a fair basis.
When it comes to the anti-competitive subsidies from the Chinese state, specifically on clean energy, what are your specific concerns? And do you see those as distorting the European market? And how difficult is it to address those concerns at a time when you're having also difficulties on other trade relationships like Washington and pressure from many different sides?
it is very important to keep on driving joint ventures, capacities that provide goods in a fair manner, and to avoid this type of subsidies that could harm the clarity, the transparency on the real cost being reflected on the price. There are tools, regulatory tools that we apply in Europe that ensure transparency, that ensure that subsidies that are not fair are avoided, and that play more or less in the same terms that are demanded for the European companies.
European Commission Competition Chief Teresa Ribera there speaking to Sharian a little bit earlier. Well, America's biggest banks kick off earnings season this week, riding the momentum from trading and lending that thanks to recent market swings following President Trump's flurry of tariff announcements. Bloomberg's Shonali Barsak breaks down what's ahead.
JP Morgan kicks off U.S. bank earnings, and investors will be watching closely for the health of the U.S. consumer. Federal Reserve data has shown that credit card balances have been slowing, and the question is whether JP Morgan and other big card providers will be able to generate more and more net interest income from a U.S. consumer that is seemingly fatigued from the U.S. tariff strategy. Now, Wall Street, on the other hand, there are a lot of bright spots. For example, mergers and acquisitions, they have been coming back in force. Will that continue through the end of the year is a big question for JP Morgan CEO Jamie Dimon, as well as the big investment banks. Goldman Sachs and Morgan Stanley, the three biggest investment banks, have been trading at or more of 2 times their book value. And as their stock has appreciated, investors are expecting them to benefit from deregulation as well as volatility in markets that will give trading desks a bigger windfall. The question is, which trading desks are winning more than others? And will the Main Street banks, for example, Bank of America, Wells Fargo, and Citigroup, which also have big investment banks, will they be benefiting from the U.S. consumer as well as some spending activity starts to slow? I'm Shonali Barsak in New York for Bloomberg Television.
Bloomberg has learned that the U.S. is working towards an interim trade deal with India that may cut its proposed tariffs below 20%. For more, let's bring our India trade and economy reporter, Shruti Srivastava. So, Shruti, if this comes to fruition, if it's finalised, how advantageous is it for India compared to some of the other countries that are still struggling to negotiate deals as well?
Yeah, so India and the US are working towards an interim deal which may see the proposed tariffs below 20%. And we should note that the reciprocal tariff for India was 26%. So this is definitely below that. If finalized, this definitely puts India, in a much advantageous position compared to its peers in the region, say, for instance, Vietnam or the Philippines or even Brazil. We have seen in the last few days, the Trump administration has been sending tariff demand letters to these nations. Over the weekend, we saw European Union hit by a 30% tariff from the Trump administration. So definitely, if India is able to secure an interim deal which puts the rate below 20%, it's going to be an advantageous position and may see, supply chain diversification getting moved to India.
What are the key flashpoints that continue to potentially be hurdles?
At this point of time, there are a couple of things, very few things which are holding up a deal. The American demand of, India opening up its agricultural sector for genetically modified crops, that's one big red line which India has refused to budge on. Both the sides continue to negotiate that. From the Indian side, India is seeking some sort of reprieve from sectoral tariffs, especially in the proposed one in pharma and the auto components. Now, these are some of the asks on which both the nations have refused to blink so far. An Indian negotiating team is traveling to the U.S. this week, where we will see a resolution of some of these key flashpoints. Though the timing of the interim deal is still unclear, we don't know for sure if they would be able to indeed resolve all the issues this week.
Our India trade and economy reporter, Shruti Srivastava, there in New Delhi. Coming up, we get the first report into last month's Air India disaster, revealing that fuel switches were flicked off seconds after takeoff, but plenty of questions remain about who did it, if anyone, and why. Details next. This is Bloomberg. Welcome back. You're watching Insight. Take a look at some of the other stories that we're following this hour. And Vietnamese media say Prime Minister Pham Minh Chinh has called on US businesses to support his country's attempt to secure a final tariff agreement with the Trump administration. Chinh reportedly made the request during a Friday meeting in Hanoi with the US ASEAN Business Council. Bloomberg earlier reported that President Trump's 20% tariff rate caught Vietnamese leaders off guard. The US government is reportedly pressing Japan and Australia to clarify their roles in the event of a US-China war over Taiwan. According to the Financial Times, Elbridge Colby, the Undersecretary of Defense for Policy, has been pushing the issue with officials from both countries in recent months. The move is reportedly upsetting the two key allies in the region. French President Emmanuel Macron is promising a new and historic effort to increase defence spending. He said in a speech that he will double the annual defence budget to $75 billion by 2027, which will require increases of around $4 billion in the next 2 years. Macron says the move seeks to counter an acceleration of threats to freedom in Europe and the risk of outright war in coming years. Iran's foreign minister says the US is trying to restart nuclear talks, but stressed that his country is in no hurry to engage. Abbas Araghchi said that in televised comments that Iran had received multiple messages and is weighing options. He added that Iran needs guarantees that it won't be attacked again if the talks don't succeed. Meanwhile, Araghchi will be visiting China on Monday for the Shanghai Cooperation Organization Summit. Well, we are still watching crypto given the big moves that we've seen in the last few days. Bitcoin hitting that record high of $120,000. That bullish momentum and the sort of recorrelation that we've seen with US equities has really continued. We're seeing upside there in intraday trading of about 1.6%. The bulls are really saying that the conditions are still ripe for a continued rally there. We've seen quite a lot of bearish crypto bets over the last few sessions so being liquidated there as well. At one point, over $1 billion in crypto bets on the bearish side were liquidated within 24 hours. According to Signal Plus, for one, they're saying that slow grind higher have been in place for some time, that the moves that we've seen appears to be a product of that setup as we continue to see these highs being accumulated by Bitcoin. We've also, of course, seen across the rest of the crypto spectrum that a number of the other coins have seen that renewed rally as well. There's been fresh ETF inflows as well as that congressional committee in the US declaring this week as Crypto Week, with traders and fund managers offering various triggers for that sudden melt-up that we've seen. Let's take a look at Indian markets as we see potentially the hopes that we could see something more of a fundamental sort of significance to these trade talks and a trade agreement being reached between the two major trading partners. But take a look, a little bit of downside as we see trading at the moment. The Sensex off by just about 0.1% into the open. The Nifty also a little bit softer. Financials there looking pretty flat at the moment as we continue to see really some caution. We do have some data as well. We've got the government monthly consumer price inflation data, the wholesale price inflation data there, as well as a number of key earnings, HCL Tech, Ola, as well as Tata Technologies, among some of the companies that are reporting earnings throughout the course of the day. We're also watching India-China relations as well, given this sort of effort by China to diversify some of its markets. We'll see if anything comes out of the foreign minister's visit to China this week. Some of the stocks that we are watching at the moment, including the likes of VIP Industries, and staying on India, Bloomberg has, we are seeing really the multiple private equity to acquire a 32% stake in VIP Industries from promoters. That's according to the Business Standard. India's largest luggage and suitcase maker is in focus as well. To one of our top stories for India, Bloomberg has learnt that Jane Street has deposited $564 million in an escrow account to comply with an order from India's securities market regulator. This comes after the trading giant had been banned from India's market over allegations of index manipulation. Our senior Asia equities reporter, Abhishek Vishnu, is joining us now from Singapore. So, Abhishek, what are we learning here?
Well, sources are telling us that Jane Street has deposited $564 million in an escrow account to comply with the July 3rd order of India's markets regulator. They have now got the right to resume trading, but sources are also telling us that they won't be resuming trading, at least on the options side. What this means is that, this is one step ahead in, SEBI versus Jane Street on that alleged manipulation. And Jane Street now, does not mean that it's not going to fight. It's still going to fight the case, but they have deposited the amount. They are going with what regulator had as advised. In terms of India's ecosystem, I'd say, from my talks, this appears to be a bit more positive for the exchanges as well as for the brokers, because this entity or the entities that Jane Street was using, they might now be more easily unwinding trades or resuming business as and when they want, which means turnover or concerns around options activity that were existing right after this order, that they may evaporate. Other than that, it also means that this case is moving forward. There might be an earlier resolution than what most are expecting. Remember, SEBI takes around a year and a half to some cases 5 years to come to conclusion in investigation, and this includes a lot of entities which are outside of India, a foreign investor, and it gets a bit convoluted because other government agencies also get involved. So given now that Jane Street has deposited this money, they have the right to resume trading, but they are not, sources are saying that they won't, at least on the option side. And that's happening because if you remember the order and what SEBI had said, profits were made largely from option side of the trade and losses were made on the future side. So, that's where, the second bit of information that the Jane Street is not planning to resume option trading becomes important. Now, our reporters have also approached both the entities, Jane Street as well as SEBI, but we haven't heard anything from them so far.
Abhishek, when it comes to what the next steps are and what we could expect to hear, what are you seeing?
Well, one would be possible news flow around unwinding of trades that Jane Street currently has. Possible news flow on what Jane Street's plan is, whether they'll work with SEBI initially or, they'll go to SAT, the SEBI Appellate Tribunal immediately, or, they'll do the two things, alongside each other. There might also be some news flow on, who is representing which side, what is SEBI learning. So these are the next things that we should watch out for. In terms of longer time frame, beyond Jane Street versus SEBI, I mean, this case would definitely impact the regulations, the guardrails India has in place for, HFTs. The tech market infrastructure side of India, is most likely to see a sea change, especially in terms of guardrails, a relook of order routing systems, a relook of technologies involving co-location data feeds, which are primarily, responsible for HFTs getting an edge over the smaller investors. So that's the long-term implication.
Bloomberg's Asia Equity Senior Reporter Abhishek Vishnath there with the latest on Jane Street. Well, an initial report on the Air India flight that crashed last month says fuel supply to both engines was switched off a few seconds after takeoff. The Boeing Dreamliner crash killed all but one of the 242 people on board. For more, let's bring our India aviation reporter Mihir Mishra, who joins us out of New Delhi. And so, in a lot of ways, these findings, whilst quite shocking, raise more questions than they answer. What have we learnt?
Yeah, so they have raised more questions than they have answered. There's a lot of ambiguity around the report. What the report doesn't mention is the fact that, what it does mention is the fact that fuel switches were in the cutoff mode, which means fuel supplies to the engines were cut off. That led to the switching off of the engines, both the engines, just 3 seconds into the flight. Now, what it doesn't mention is the fact that, there are two aspects to it. One, when the flight switch was on cut off first, it was only switched on back in 10 seconds. The first switch was switched on in 10 seconds, and the other was switched on in 14 seconds. Now, also the second point that it does not mention is what happened in the cockpit during that 10-14 second period. What was the conversation between the pilots during that 10 seconds period? That has raised a lot of ambiguity as to what could have caused that delay in switching on those engines, switching on fuel supply to those engines, and that is clearly something that everyone is looking an answer to. Yeah.
Where does the investigation go from here? Do we have a timeline in terms of when the final report is in? And I suppose, is there going to be any sort of assessment as to what the view is in terms of what happened with the fuel switch?
Yeah, so the investigation, the preliminary report is out. Now the final investigation will begin, which the report should come to us within 12 months. So that's a long time, long wait time for all of us for the final report. But what the investigation would look at is the fuel switch. What exactly happened with this fuel switch? Was there a deliberate attempt by one of the crew members to switch it off, or was there a technical problem that led to the switch off of the switch? These aspects will be looked into very, very minutely. You know, all the data from the aircraft, computer, DFDR, and also the cockpit conversation between the two pilots during that crucial 10 seconds, which the investigating agencies have not shared yet, will provide a lot of clue to the whole reason behind the crash of the aircraft.
What are some of the analysts and experts within the industry saying about what we've seen so far?
No, so this report clearly has, polarized the aviation sector here. You know, while the multiple pilot bodies, as well as the families, the pilot bodies have clearly said that this is an attempt to blame the pilots, which is not something that they would want to happen, and they are also calling for a judicial probe into the whole thing. The families are also not very satisfied with the report. The industry per se believes that the preliminary report that came out on Saturday should have clarified a little more as to what exactly happened on that particular day, and would have pointed out on a particular reason.
Bloomberg India aviation reporter Mihir Mishra there in New Delhi. That is it for Inside. Horizons Middle East and Africa is next. This is Bloomberg.